What's going on, you guys? And thank you so much for tuning in for an episode of The Mortgage Mindset. Hey, real quick, I just want to remind you that we do not run any advertising on this show, and we are looking to grow it organically. So we cannot do that without your support. So if you find value in the show, if you got some information that you found really useful, please share the show, send it to somebody that you think might find some value in it as well. So without further ado, let's get to it.
What's going on, you guys? And welcome to episode number 2 of the Mortgage Mindset. I'm your host, Trevor Otsuka, multiple state licensed mortgage advisor with Harmony Home Loans, and also the CEO and founder of Keyframe Media. Today, I'm joined in the studio. I have a very, very good friend of mine. He is the CEO and co-founder of Harmony Home Loans, based out of Las Vegas, Nevada. So we're going to run through the show pretty quickly today. Just to remind you of the show format, we're going to do a brief market update, kind of tell you where rates are at, what's happening in the economic reports that were released today, things that might be coming down the pipeline that are going to dramatically impact, in my opinion, the mortgage industry and then also real estate. So I'll update you on that. Then we're going to roll right into an interview series with Nick, ask him some questions, kind of get his temperature and his feel of what he thinks is moving and happening and shaking in our industry. And then we're going to feature one article. I'll read the article to you guys. We'll go through the headline, and then I'll have Nick extrapolate what he thinks it means for our market moving forward. So first, before we get too far into it, let me take a moment and just express my gratitude to you guys. Thank you so much for tuning in and sharing your most valuable resource with us, which is your time. So I hope that I'm able to deliver and give you something of value for that time and kind of share with you what's happening in the market. So without further ado, we're going to jump in. Today's rates have already been updated, slowly creeping up. Yesterday, which was Wednesday, today is Thursday, October the 19th. Yesterday, the national average with Mortgage News Daily hit 8% for the first time this year. So we're looking at the highest rates we've had in over 20 years. So we'll start with the 30-year fixed conventional national average right now is 8.03%. 15-year fixed will be at 7.35. 30-year jumbo is averaging right now 8.09%. And then for 30-year FHA, national average is 7.44. And then 30-year VA is actually averaging just a tiny bit higher than that at 7.46. As far as what's going on in econ, let's see, we had today jobless claims that came out. So the forecasted jobless claims was going to be 212,000 for last month. The prior to that was 209,000, and the actual report came in at 198,000. So that means that people are getting second jobs or picking up extra jobs right now in the current economy is the way that I'm going to interpret that for jobless claims, as it is declining. It means more people are getting back into the labor market. So it's kind of the opposite of really what the Fed wants to see when they're doing all of these rate hikes. They want to see, a little bit more pain in the economy. They want to see that unemployment rate start climbing up before they ever consider, reducing their rate hikes again. And we're moving in the opposite direction. People are feeling the squeeze because of the cost of living, and they're probably picking up extra jobs. And that's what's popping up in these reports. As far as things that are coming down the pipe, I talked about this on the last show, and I'm sure that Nick here could attest to this. There's an update from Fannie Mae coming on November the 18th that's going to change the way that they do their multi-unit purchase and cash out refinances. So that'll be for primary residence only, and it's going to be for 2, 3, and 4 unit acquisitions. So they're going to increase their loan to value, therefore decreasing their minimum down payment, and they're just going to make it a flat 5% across the board. So to me, this is going to dramatically impact home affordability because, I don't know if you know this, but we can actually include that projected rental income from the other units that you're not going to live in, therefore improving your debt to income ratio in the file and significantly improving your chances of getting that approval. On top of that, as it stands right now, unlike FHA, FHA has a secondary rule that is called the self-sufficiency rule. So what that is if you're buying a 3 or a 4 unit, the rental income from those units must at least carry the burden of that overall mortgage payment. Very hard to do in the current market. Conventional, they don't have that same rule. So it's going to be a much stronger offer for you as a client. It's going to be a much stronger offer for you as a real estate agent. And the difference is 1.5% in that down payment. So I think that a lot of clients will definitely be able to swing that and make you look a lot stronger. So we're now I want to introduce you to Mr. Nick McGarry. Nick is, again, the co-founder and CEO of Harmony Home Loans. They are licensed in multiple states. They are a wholesale broker shop. They do have a non-delegated correspondent line as well through UWM, and maybe Nick can tell you a little bit more about kind of what that means. They are also expanding, so we'll get into that a little bit. All right. What's going on, brother? How are you?
Good. Good morning.
Good, man. You just got a haircut today?
I did.
Man, you looking sharp.
Bright and early, man. Bright and early.
I'm jealous, man. I can't grow a beard at all, and you're coming in here looking like a ginger bearded warrior.
Well, it's a lot better than what it looked like yesterday.
So what's going on, man? How's the business been for you this year?
Good, man. Good. Fortunate to say that, we continue to grow regardless of, what's going on around us. Obviously, it's a shrinking market. So I'm fortunate to say that, we've been picking up speed and growing month over month.
Okay. How long has Harmony been going?
So, complicated question.
Yeah.
Just due to like the timing of states and whatnot, I officially moved my license over to Harmony in February of 2022. We got our first license in Florida in March, and then Texas shortly after. Our entire team is based out of Las Vegas, so we couldn't move the entire team over to Harmony until our Nevada license was in, which unfortunately
took a while,
until October.
Yeah, you were telling me about that. You had multiple mortgage lending division issues there, where the person that was originally working on your file there left the team, and then your file kind of bounced around between multiple people.
Yep.
So that delayed it.
Yep. They had to start it over 3 times because every time somebody quit, a new reviewer had to be assigned to the file.
Yeah.
And they had to start the process over. So it was a journey, but I think ultimately it made it worth it. It made us want it even more.
So I know that your parents are both mortgage originators. They've been in the game for quite some time.
Yep.
Right. Your dad first, and then your mom followed after.
Yeah. That's correct.
Okay. Did you always know that you were going to end up getting into mortgage lending?
It's funny. I had a feeling you would ask me that question, and I didn't. As a kid, obviously, like I always wanted more. Was always pretty ambitious, but I didn't know I was going to do mortgages. I started a business when I was 16 years old, and it was those walk-in billboards.
Really?
Yeah, you remember those walk-in billboards on the strip?
Yeah.
So to back up a little bit, when I was like 15, my dad gave me $100 to buy. I wanted to buy these Power Balance bracelets off of from China.
Yeah.
Right. So he gave me $100. I bought 100 of them. They were $99 a piece.
Yeah.
Or sorry, 99 cents a piece. So I bought 100 of them. Ended up selling them, and realized like, oh, you can actually, fend for yourself and make your own money.
Yeah.
So I started doing that. Got an idea on that same Chinese website, there was a walk-in billboard, and my dad had a bar at the time on the strip in the Riviera, which is now blown up. But he had a bar there. So he ordered 2 of these signs. And then anytime there was like a big soccer game, we'd go to Kinko's, print these, almost transparent ads that you put on them. And there's a little light, and I would walk up and down. And I really spent a lot of time doing that. A couple buddies of mine from high school, every single day we'd meet and we'd go, try to sell our services to other people. Right. And you know how entrepreneur math works.
Yeah.
I figured I could charge $16 an hour to these restaurants, bars, and other businesses on the strip, and I could have a minimum wage job while I'm going to school.
Yeah.
Because I would pay someone minimum wage. I'd charge $16. I'm making $8 an hour.
Right.
Right. So I think my dad saw that I was really eager and trying to get into the workforce and trying to like earn my own living. And I remember he told me one day, I think you can really make some good money doing mortgages.
How old were you at the time?
I was 18.
Okay.
Just about to graduate high school.
Okay.
And I was always coming up with new ideas and doing these things, right? So people at my school started to like lose faith. My friends started to lose faith because every 3 months I had this new idea and I'm going to be a millionaire, just like give me 6 months, whatever. So when he told me like, hey, I think you could make, $50,000 to $80,000 a month doing this, because they came out with a program at the time, HARP 2.0.
Yeah.
And I'm like, hold on 1 second. I ran to my room, grabbed my phone, put the recorder on, and then went back. I'm like, can you say that one more time? And he's like, yeah, I think if, you got licensed, we could get you on the phones and you could make, $50,000 to $80,000 a month and actually help people with this new program. I'm like, no way that this is a real possibility. Went back to school and showed my friends. I'm like, listen, like, it's not me saying this. It's, my dad saying we can make $80,000 a month. I really think we should take this seriously.
Yeah.
So me and a couple other buddies signed up for our class and then ended up taking our test and getting licensed. And it wasn't that easy.
Dad hyped it up, huh?
Took me a long time to actually ever see anywhere remotely close those figures. But yeah, that's how I got into it. And I brought a couple friends along with me.
Okay. So you went through a couple of different journeys, a couple trials, tribulations to get to where you are now. So let's talk about present day, right? How many total loan officers do you guys have with the company right now?
18.
18. Okay. And what are the plans moving forward? We're in Q4 of 2023. It's been a pretty challenging year across the board for mortgages, for real estate agents, for title reps. Really just the whole industry in general is feeling the squeeze pretty tight.
Yep.
So what are your plans moving forward to make sure that Harmony, by the way, you guys are number 4 in the state for wholesale brokers for the state of Nevada, right?
Yep.
Yeah. Congratulations. That's
Thank
awesome.
you. Appreciate it. So my plan, I really like direct to consumer. So that's where all of my focus is going to be.
Yeah.
Don't get me wrong. I love the relationship side of the business. I love meeting new people, building relationships with, valuable partners and everyone helping each other grow. I love that side of the business. But as far as scalability and predictability, I think that direct to consumer is the only way to actually scale your business, like predictably. So I'm really putting all of my attention there, and yeah, I'm gonna figure that side out. It's something that we've done since 2018. 4 years, we only did direct to consumer. We never got any deals from real estate agents. I wanted to switch it up, and when the market turned, I felt it was a good opportunity to switch the model up and kind of start fresh. And so in about August of 2022, I stopped buying leads completely. Went from buying $20,000, $30,000 a month to nothing.
Yeah.
And kind of ripped the Band-Aid off and said, all right, let's go out there, let's meet people.
Yeah.
And build valuable relationships. So we did that, and I think it's great. And I think we've been able, we found success in that arena. But direct to consumer for me is going to be my main focus over the next 12 to 18 months.
And then for the listeners that don't know, what exactly is direct to consumer?
So traditionally in this business, a lot of loan officers build their business around realtor relationships and getting referrals from real estate partners, which, again, nothing wrong with that. I think that's a great way to do business. But for me, it's not predictable, right? Like, you don't know when you're going to get the next lead. Like, you're sitting around, you wait a lot of times waiting on those leads. Whereas with the direct to consumer, you're either generating or purchasing your own leads, and you're the one that's reaching out to the borrower first. You're, garnering their interest, getting them pre-qualified, and now you can be an asset to those same real estate agents that trusted you with their business, and you can actually give them business back, and it can be a two-way street.
So on a micro level, do you think that direct to consumer is going to be really one of the only ways that we can capture some of that business that is now going to these huge aggregates like Zillow, right? Like Zillow just came out with their Zillow Flex program, and we have agents all over the country spending millions of dollars they're just funding these huge aggregates. And now they just announced they have their own mortgage company that they tried before, but now they're bringing it back. So I'm sure that they're going to have some type of incentive for these Zillow Flex agents to only use those Zillow mortgage lenders.
100%.
So do you think that direct to consumer is the way that we're going to fight that back?
I mean, to be honest, I don't know. I don't know if you're ever going to be able to fight that. I mean, this industry is changing. The way people buy is changing. I talk to people in my age group under 30 all the time, and I ask them, like, hey, when you bought a house, what was your first step? Go to Zillow.
Go to Zillow.
That's it.
Yep.
They go to Zillow, they go online, they find a couple houses, and then they'll call a real estate agent from Zillow, right?
Oh, the recommended one.
Exactly. They'll see a house that they like. They don't know much about the process, but they know they want to go see that house. Mm-hmm. And there's a real estate agent's phone number right there. They call them up. Boom. That's how a lot of people are starting the process. So I don't know if you're going to be able to combat that. That's just how people buy, right? But I do think that direct to consumer is a way to go get yours.
For sure.
Without having to, rely on anybody, and you can actually build a sustainable business that is predictable because you're not relying on anybody, right? The traditional route is loan officers rely on real estate agents to prospect,
Correct.
door knock, do open houses, garnish leads to then send them over to them, and that's when their job gets started. But I feel like we can contribute to those same partners that are out there doing those things and partake with them. I feel like as a loan officer, you actually have an upper hand because you can do all of the same things that a real estate agent does to get business, plus you can talk to real estate agents, you know?
Right,
So
yeah.
like you have every other avenue available to you to get business. It's just people aren't trained on doing that.
Yeah.
You know, when I first started, everyone always said, you have to meet with real estate agents. You have to meet with real estate agents. Take them to coffee, take them to lunch. And it didn't work for me for a couple of years.
Yeah.
You know, and there could have been many reasons that was the case. Internally, I feel like it was my age, but that could just be, you know, like an internal
Is that why you grew a
thing.
beard?
Yeah, exactly, right? But I couldn't get a deal to save my life. Wrong approach, not adding value, wasn't very, experienced in the field, and it was tough for me to get anything going. But that's all that people would teach, you know, and you walk into these offices.
That's all they say. As soon as you get in the door, they're like, oh, yeah, you just go do open houses, go stop in at brokerages and talk to people, but you have no relationship with them
Then
at
you're
all.
making $80,000 a month, right?
No.
It doesn't work like that, unfortunately. So after a couple of years of doing that, wasn't really working out. I ended up starting in a call center and really learned how to communicate with people over the phone.
Yeah.
You know, at the end of the day, you're just a voice when you're calling people. So you really have to practice and focus and pay attention to your tonality, your word placement, you know, timing. And it makes you a better salesperson if you're closing people
Over the phone.
on the biggest.
Probably the hardest close, right?
It is the hardest way.
Yeah.
I tell people that. They're like, oh, well, telemarketing's hard. I'm like, yeah, it is hard. It's probably the hardest way to do it. But if you could do that, then, you know, walking in face to face with people is a piece of cake.
Piece of cake.
You know, piece of cake.
Any advice that you would give loan officers in the current market right now?
Yeah, my biggest advice, and I keep saying this, so I probably sound like a broken record, but just block out all the noise, you know, because there's a lot of people saying, you know, negative things, rates are high, people aren't buying, you know, all of these things, which are true to a degree, but for most people, you're too small to be affected by this.
Yeah.
You're too small. You can grow through this shrinking market. You're not a $1 billion company. You're not closing 1,000 loans a month, and now like you see a big drop, and now you go from 1,000 and now you're at 500 or 300, and you have all this staff, and like we're not in that space. So like it's not as crippling for smaller businesses, right? And there's still business out there for you to go get. People are buying homes in every single market all the time. Thousands of transactions are closed in a day. They're just not using you. So you have to figure out why they're not using you and fix it.
Yeah, that's great advice. Guys, we have the next segment we're going to roll right into here. So the article that we're going to feature today is another one from Housing Wire.
It's a big one.
It's a big one. It's a big one. All right, so headline reads, Data Digest, nearly 100,000 loan officers have washed out. Who's best positioned to succeed when the market rebounds? So we're going to get in here. It says, for years, broker channel evangelists told me that a down market would give them an edge on their retail brethren. Well, it's certainly been a down market. How has the broker channel fared in the wake of the Fed rate hikes? We asked the good folks at mortgage data technology firm Ingenious to run the numbers comparing the first 6 months of 2022 to the first 6 months of this year. Take a look. So if you guys are watching this on YouTube, we'll put this infographic on the screen, but it looks like, here it says in quotes, from the first 6 months of 2022 to the first 6 months of 2023, brokers have increased their percentage from 23 to 28%, so a 5% increase year over year, while retail has decreased by the same percentage. So that tells us, right, me and Nick, that if we're reading this, that means that we are capturing year over year. We've taken 5% of the retail market from retail bankers and moved it over to the wholesale broker channel. So this is a direct quote from Jeff Walton, the CEO and co-founder of Ingenious. He said, end quote, there's definitely a shift. And while we know there is a lot of movement going on with people losing jobs because of mergers or closures, a certain percentage are moving to brokerage instead of any other retail company, end quote. It should come as a great surprise that wholesale has gained market share as refi activity has slowed. A significant number of retail lenders were purpose-built to pump out huge refi volumes with a call center model, right? You've experienced that in the past, right, with other companies.
Yep.
Broadly speaking, the broker space tends to be more relationship-focused, which lends itself better to a purchase environment. So if you were to break this down, what do you think that this means, or what is this telling you about the current market in the short term and then what it's going to do long term?
Well, I do think that, especially in markets like this, right? I've been in the industry going on 10 years now, and a few times it's, the sentiment of the industry has flipped. Oh, it's a banker world, it's a broker world.
How long you been in now?
Going on 10 years.
10 years, okay.
So it's flipped back and forth, as far as which is the better option.
Yeah.
For LOs and consumers. And right now I think it's definitely the broker world is the better option for loan officers and for consumers. If you were to ask me that same question 5-6 years ago, I wouldn't have felt the same way. And a lot of that was the broker channel. What UWM has done has completely changed the broker channel. When 4 or 5 years ago, 6 years ago, there was very little support. Like, you could barely even get a hold of your AE a lot of the times.
Yeah.
Right. And I think Matt saw an opportunity with that and opened up the lines of communication to now, you can reach out, call your underwriter, get on the phone with them directly within seconds.
Yeah, I've seen you do it.
And get an answer, talk through a problem. If you don't agree with the way they're looking at it, you can escalate it. And just the system that he's built has really been focused on customer experience, and his customers are loan officers.
Are the brokerages.
So,
yeah.
It's all about the experience, and that just wasn't there 5-6 years ago. So it was a lot tougher to get loans done. And that's why, a lot of loan officers wouldn't work for a broker. They needed the in-house underwriting. They needed the in-house docs because they needed somebody in their building
that they could walk down the hallway, have a conversation with, hey, what's going on with these conditions?
Exactly.
Can you help me clear these? That kind of thing.
Exactly. And you don't have to do that. You don't have to do it. I think you have more of an edge now because, like, for us, we're assigned a pod, and we have 12 underwriters. So
in the pod?
In the pod.
Oh, wow.
And they are always the underwriters on our deals, unless we switch pods, which we have done in the past to get, better underwriters. But point is, it's the same 12.
So they moved you up in underwriter tiers, basically.
Exactly.
Like it was underwriter 2, then they moved you into a pod that's underwriter 3 or something like that.
Just a more tenured pod.
Yeah.
Still underwriter 2s and senior underwriters, but just a more tenured pod that's been there for a long time. But yeah, you have your same 12 underwriters. So you're not having to get to know. I mean, I think he has 4,000 underwriters right now.
Jeez.
You don't have to, bounce around and work with all of them. You have 12. And those are your 12. And it's always going to be the same 12. And those 12 have one leader. And if you're disagreeing with any of those 12, you talk to their leader, right? And so on and so forth. So I just think what he's built has given brokers a lot more resources, tools, technology that makes our job easier, which helps us provide a better experience to the client. And that's why they're taking market share.
Yeah. I think I see, too, that, before all of these retail banks had their portfolio loan programs that were only available in-house.
Yep.
But I'm seeing more and more programs come available in the broker space that are very similar to those portfolio loan programs. I mean, we can do crazy doctor loans now in the broker channel that previously weren't available. We have all the down payment assistance programs available. There's so much that we can do.
Yep.
We could do QM, non-QM, investment loans, DSCR.
I-10.
We even have hard money now.
Yep.
Right?
There's so many different loan products with the broker channel. And a lot of people actually don't know this about the 1% down. It's Matt that's funding the other 2%.
No, I didn't know that.
He's the one paying that other 2% down to allow people to get the 1% down. I didn't.
And there's no recapture on this, right?
No, there isn't.
Wow.
So, yeah, I just think that he really cares and he wants to give brokers the products and the tools to compete with retail lenders because he obviously has a vendetta against these guys. And he's made it very, very clear. Even some of the stuff they do, like with their charity and like donating, like him and Dan Gilbert are just going at each other. It's pretty fun to watch.
You going out there next week, right?
Yep, on Monday, and then I come back Wednesday.
Cool. Yeah, we're going same trip. So we're going to be out at UWM campus checking it out.
Yep.
Getting some learning in. Going to see that amazing facility that Ishbia and the crew put together.
It's your first time going,
First
right?
time going, yeah.
Yeah, see, it's good because now you're going to go and you're going to meet the people that have been underwriting your loans.
Yeah.
We're going to meet our pod. I've been a few times before, so I know these guys, but yeah, you're going to meet them, see them face to face. You're going to see how the whole operation works, which it really is mind-blowing. And it's one of the questions I asked when I was there is how do you manage a company of 7,000 people? And one thing that he said is super aligned with Cardone Ventures, which is a program I went to. It's like a coaching consultant program. They said the same thing, that one person should not manage more than 12 people. And like scientifically speaking, or, they've done studies, one person can only adequately manage 13 people at the absolute most. So his entire company is broken down exactly like that.
In groups of 12?
In groups of 12.
That's why you have 12 underwriters in your pod.
Exactly. And then he has 12 people on his executive leadership.
Yeah.
And it's all broken down, 12, 12, 12. So they all manage 12 people all the way down. And that's how you manage a company of 7,000 people, because things just get run up the ladder.
Yeah.
So he's only having to talk to and get reports from 12 people a day, which is, it's pretty impressive how the whole thing runs, and everyone's walking around there happy, smiling.
Yeah.
They're genuinely happy to be there and happy to come to work. And it's just cool to see that. And that's why I always encourage people to get out there and go see what a mortgage company can look like.
For sure.
Like what is actually possible. It's right there. He's built it.
Yeah.
It's insane. Very inspirational.
Well, if people that are watching this, if they want to connect with you, where can they find you? Where would be the best place for them to reach out?
I would say Instagram's the best place, at Mortgage McGarry.
Mortgage McGarry?
Mortgage McGarry.
You're on LinkedIn as well, I assume?
I am on LinkedIn as well.
Cool.
Nick McGarry on there.
Yeah, we'll post this and we'll tag Ishbia, see if he gets an opportunity to listen in.
Yeah, I heard he goes out and does podcasts with brokers and whatnot. We just got to make enough noise to get on his radar.
Yeah.
I think we're doing that.
I think you're doing that. Number 4 in the state of Nevada.
Yep.
Plans for expansion. What's next? Are you recruiting? Are you looking for other states right now?
Yeah, I'm really looking to break into the Texas and Florida market.
Good.
I really just like those two markets as a whole. I've done a lot of business in there over the years, but I really want to put a stake in the ground and find some like-minded people that fit the culture, because you know how important the culture is to us.
Yes.
I want to find somebody that fits the culture, that's looking to do big things and just needs the platform, needs the support, and partner and build something meaningful in Texas and Florida.
Cool. Well, you guys heard it here. Nick McGarry, the CEO and co-founder of Harmony Home Loans. If you guys are in the state of Texas, or if you're in the state of Florida, if you're a mortgage advisor, if you are a branch manager, and you need to get into a place that is going to revitalize you in the current market. Maybe you're feeling down. Maybe you're not having the production that you want, and you need some young, hungry, forward-thinking team leaders to get in there and kind of give you the support that you need to get back on track. Reach out to me. I'll get you in touch with Nick McGarry. And that'll do for this week's episode of The Mortgage Mindset. We'll see you guys next week.
Let's go. That was awesome, bro. Appreciate it.
Yeah.
Let's go.